Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AUX Electric Interim Report. AUX Electric Co., Limited offers a diverse range of air conditioning products and services under the brand name AUX. Their business portfolio includes wall-mounted air conditioners, vertical cabinet air conditioners, domestic central air conditioning systems, light commercial air conditioners, commercial heat pumps, project cases. These products are sold through retail stores, providing customers with a convenient shopping experience. AUX Electric's stock price has dropped significantly over the past year, with a decline of -10.07%. The company's initial public offering, IPO, on the Hong Kong Stock Exchange on September 2, 2025, saw its stock open at HK $16.10, marking a 7.6% drop from its offer price of HK $17.42. This decline was attributed to international investors selling into the offering within the broader Hong Kong IPO market. The company's shares have continued to fluctuate, with a 52-week trading range between HK $14.15 and HK $16.79 as of September 16, 2025. The primary drivers of revenue growth or decline can be summarized into the following key points. Revenue growth drivers. 1. Government policies supporting emerging consumer markets and rural revitalization initiatives. 2. Market price adjustments, high summer temperatures and e-commerce channels driving sales. 3. Product upgrades driven by policy initiatives and consumer demand for green energy conservation. 4. Overseas market growth, particularly in Asia, excluding China and Europe. 5. Accelerating global expansion through launching new products in the Middle East and ASEAN markets. Revenue decline drivers. 1. Fierce market competition leading to a continued decline in average prices. 2. Downturn in central air conditioning industry market capacity. 3. Delayed project cycles and macroeconomic environment affecting traditional and construction customers. 4. Decreased sales from key entities, including Longshicheng, Jiahukai, Wenbeng, Due, and Kunyuan. These drivers highlight the importance of government policies, market conditions, and consumer demand in driving revenue growth or decline. Net income saw a 5.1% increase in the first half of 2025 compared to the same period in 2024, indicating a positive trend. However, profit margins experienced a decline due to several factors. The gross profit margin decreased from 21.1% to 19.5%, primarily attributed to optimized order mix and higher original design manufacturer (ODM) sales. Additionally, selling and distribution expenses as a percentage of revenue increased from 3.9% to 4%. Despite this, administrative expenses remained relatively stable at 2.7% in 2025 compared to 2.9% in 2024. These changes suggest that while net income is increasing, profit margins are being affected by operational adjustments and shifting sales dynamics. The company is indeed generating positive operating cash flow. This is evident in the financial summary, which states that the company is producing a net cash inflow from its operations. Specifically on page 18, it is noted that the company generated $482,319 in net cash from operating activities, indicating a positive cash flow. Furthermore, as shown on pages 36, the company's cash flows generated from operations have been steadily increasing over the past 2 years, reaching $947,641 in 2024 and $985,430 in 2025. This upward trend suggests that the company is successfully managing its operating activities to produce a positive cash flow, which is a key indicator of financial health. The company's debt level and interest expenses have undergone significant changes. According to the financial summary, the total debt has increased by $800,417 from $252,822 to $21,053,239 on page 32. This increase is consistent across different pages, indicating a notable rise in debt. However, there is conflicting information regarding interest expenses, with finance costs increasing by 33.8% to RMB 35.5 million on page 17, and interest expense decreasing from RMB 156,000 to RMB 77,000 on page 50. The company's financial performance varied across different segments and regions. Notably, the household air conditioners segment excelled in China, while the intelligent air conditioning category led globally. Emerging markets such as Southeast Asia, the Middle East, and Africa, along with high-end markets targeted by Shinflo brand, also showed strong performance. In contrast, mature European and Asian markets may have struggled, indicating a mixed picture of regional performance. Management's outlook and strategy. The company plans to allocate its net proceeds from the global offering over the next 5 years, with a focus on research and development, 20%, upgrading manufacturing systems and supply chain management, 50%, enhancing sales channels, 20%, and working capital/general corporate purposes, 10%. This allocation is aimed at driving growth and improving operational efficiency. Additionally, the company intends to explore new investment opportunities that align with its core business, seeking synergies and enhanced services for customers. The company's financial summary reveals that it has chosen to reinvest its profits rather than distributing them to shareholders. Specifically, the company has not paid dividends in either 2024 or 2025, indicating a focus on internal growth and development over shareholder returns. The absence of information regarding share buybacks suggests that the company is prioritizing other uses for its capital, such as investing in new projects or expanding operations. Concerns about inventory buildup or supply chain disruption are present in the company's financial summary. Specifically, pages 13 and 16 highlight potential issues. Simplifying distribution channels and piloting cloud warehouses on page 13 aim to strengthen supply chain coordination, suggesting existing problems. On page 16, a significant increase in selling and distribution expenses by 19.3% year-over-year indicates possible inefficiencies or disruptions in the supply chain. That concludes the financial summary for AUX Electric. Feel free to comment below, and I will be happy to answer them when possible.